This is EURUSD pair, and today it's Thursday, 4th of July 2013, and the time is 14:54 GMT. We are looking at the 8-4 time frame of the pair. We had a couple of hours ago, we had this major downward move, and let's see why the pair fooled us with data yesterday about the manufacturing sector in Eurozone and all those nice things, and that optimistically made, which apparently was a bit artificial, and why our charts and technical analysis should attract and should have more gravity for our judgment and should lead our decisions instead of paying attention to the news or whatever. Of course, some news are very important, but all news and all the impacts of the releases are incorporated, are embedded in those databases we call candlesticks. So although we saw this move yesterday for expecting a bullish reversal because the pair was on a corrective move after this upward wave, we thought it would reverse, okay? But the data, those huge databases, were telling different things, different stories. And if we go on the daily chart, we will see that all these last day's candlesticks are small parts of a big bearish wave, of a big downward wave. And the same holds true for the weekly chart as well. We have 1, 2, 3 weeks in a row which have been bearish. And on the monthly chart, we see a descending triangle. We see a consolidation, a range-bound move, but in a descending triangle, which is a very powerful, very strong, bearish pattern. So we always should look and pay attention to the bigger picture, because all the major information, the major pieces of information are included inside the candlesticks. So this valid using Bollinger Bands, alligator and fractals, we see that we had a valid bearish candlestick, bearish fractal here close to the upper Bollinger Band above alligator's teeth, which led to this move. Then we had another below alligator's teeth, which led to this minor upward move. But now we have this move and this move prevailing, and we should expect a very strong breakout at any moment. And judging from this formation, from this triangle, odds are it will be rather bearish than bullish. Usually when we have 4 times, when we have a trend line touched 4 times, it is possible that the next time it is touched, or the 4th time, should be a breakout. But since we didn't have it here in the upper trend line, we expect to have the breakout on the lower trend line. Let's go back to the weekly chart. Here it is. To the daily chart. Here it is. to the H4 chart, we see now that we had this fractal, this bearish fractal up here, but when we had it formed, leading alligator was curved upwards. That's what fooled us. That's what fooled us to believe that this bullish reversal fractal low here on the lower Bollinger Band was strong enough to push the price up to the other Bollinger Band. But we didn't pay attention to this fractal here saying that there is resistance here and price will not go higher. We didn't pay attention to this. Because we didn't pay attention, we ignored that at the same time we had a very bearish picture on the daily chart. We saw that, but we believed that we hoped, which is a very big mistake in Forex, we hoped that price will keep going up. That was wrong. If we had looked more carefully to the daily chart, we would see that nothing was confirming the possibility of a reversal. Okay, we saw that we would see that the price was moving on the lower Bollinger Band, and the lower Bollinger Band was going downwards, and so was going the median Bollinger Band, and so was falling the alligator. And we will see that the upper Bollinger Band was not only parallel, but also was not only horizontal, it was also curved inwards, turned inwards, which shows that no more upward move is expected, and all the move that is going to happen for now will be on the lower Bollinger Band, okay, which is straight downwards. We didn't pay attention to this very, very basic information, very important information. We paid attention to the noise. Sometimes some news, some releases are artificially exaggerated, or they are true, they are real, but they don't have the power or the gravity to go against more important, more decisive pieces of information. Okay, so my mistake was that believing that before the elections of September, Mrs. Merkel and her team will do anything possible, everything possible to push the euro up, confirming, using the euro as a tool that would confirm that their policies are correct for the eurozone. I was thinking that they would definitely be able to fight against this gravity, to fight against the market. But the market is an ocean, and it's impossible to go against the ocean, even if you are Mrs. Merkel with your team. Okay, so I would not criticize her policy, but I'm just passing an opinion. So we have bearish biases now, and we see the breakout here on the H1 chart. Of course there will be corrective moves, but odds are that price pair will keep falling. You see here. I'm going to use now Ichimoku Kinko Hyo to see things from another perspective, using another tool. So I will remove alligator, Bollinger Bands and fractals, and instead I will add Ichimoku. And here is the H4 chart. We see the Chiku span is going straight down. Leading Kumo is bearish with its edge being sharp, pointing downwards, 100% bearish. Daily chart, we had a bearish Kumo breakout, a bearish Kumo breakout. That explains a lot. After seeing the Kumo being horizontal for a while, and we see also here this zigzag move of the pair, this consolidation. Imagine the energy, the dynamic energy accumulated in the pair, and how strongly it will go to the direction that the major breakout will happen. So on the daily chart, we see that we just had a bearish Kumo breakout, and you see here the Chiku span, the line, the green line going straight below the Kumo, straight down, below past price action. Okay, straight down. If you are a long-term investor, entering now, entering short, selling the euro, is something that will give you great profits in the long term, as things look rather bearish than bullish. But if you want to be more prudent, and if you are more conservative, you can wait till you see this bearish Kumo breakout happening on the weekly chart. On the weekly chart, it may take 1 week, 2 weeks, or more, because when price touches the Kumo, Kumo represents a zone of support in the case that price goes down, a zone of resistance in the case price goes up. So it's a zone of support and resistance, a zone of equilibrium, a zone of stasis. So if we're talking about the long-term figures and the long-term moves, if you're conservative enough, you might hold your expectations till you see a bearish Kumo breakout happening on the weekly chart. On the monthly chart, we see that although there is a bearish environment, okay, and although the price is been moving below the Kumo, it is attracted by the Kumo. We have this cave here, and we may see some upward move because of the cave. It is possible, okay? And we also see a belly down flat top formation on the leading bearish Kumo. We see a belly down flat top formation, which is a bullish formation. It's a bullish formation. But we see that the edge of this formation is just turned downwards. It has an edge which is pointing downwards, so it easily can turn into a clearly bearish Kumo hanging from here. At the same time, we see the Chiku span, the green line, is below the Kumo, below past price action, and turned downwards on the monthly chart. Biases are bearish here. Biases are bearish. But this is going to be a very, very strong game, and we will see. So, for now, we have a bearish Kumo breakout on the daily chart. A bearish picture on the H4 time frame. Bearish picture, but Chiku span right now is turned upwards because we have this bullish move on the H1 time frame. You see the Kumo goes like a stair, goes downwards. On the M30 time frame, we have bearish biases, but Chiku span, you see the green line, is turned upwards. So if you want to enter short, if you were not in, if you didn't reverse your position timely, because I gave a push notification relatively late. I was away from my office for a while, and when this fall happened, I had this feeling when I saw GBP USD falling before the euro, while the euro was bullish at that time. I had this feeling, but unfortunately, I didn't warn you to watch out for possible strong reversal moves. And the big moves, every new move is born on the small time frame. So if you monitor M1, M5, M15, you can see a big move coming, and you can reverse your position depending on the platform you're using, and minimize your losses and enter early on the big move, which is a new move. Okay, so on the M30 chart, we see that Chiku span is going up. Once this bullish move is completed, you can enter short. Let's go to the M15. You will see on the M15 if the move is completed or not, but you will see it more faster. You will see it on M5, and even better on M1. On M1, what we expect to see? We expect to see a bearish Kumo breakout in order to enter short. Okay, we had a bullish Kumo breakout, we had this fall, and then this consolidation, this sideways movement, this very bullish Kumo breakout, but price possibly is gathering steam to keep falling again. Okay, or some of the investors who were short are cashing out. The same investors who were bears here, they become bulls and push the price up because they cash out some of their profits. So when you see a bearish Kumo breakout on the M1 chart, and then you see Chiku span going straight down below past price action, straight down in the open space on M5, straight down in the open space on M15, straight down, turned downwards in the open space on M30, and also turned downwards and going straight downwards on the H1, you enter short. Okay, now I will give you follow-up videos on the pair. This is the least I can do to compensate you from my wrong evaluation of the pair's movement. Although this is part of the trade, there are lost trades all the time, but the human mistake error is always the number one reason for those losses. And my major mistake yesterday when I was giving the long entry signal was that I totally ignored the daily chart. I totally ignored the daily chart data. So let's see how long this downward move is going to last. And I wish you have a lot of pips, make a lot of pips, and always remember that everything, every information, every change, every news release has its impact on the candlesticks. The higher, the bigger the candlesticks, the more accurate, the more reliable they are. The smaller, the less reliable they are. They are just noise. So, although we monitor our trade from the smaller time frames, we always pay attention to the higher time frames before we enter. Okay. Thanks for watching and happy pips.